You're the non-interested third party, and that's the buffer that you want.
You know, we can make some assumptions as to what your cash flow is going to look like and what you have to do to preserve that cash flow, especially in the later years. That's the important part.
Not only that, you might look at taxes 20 years from now and can't believe what you see, but the reality is that's what it is. I want to introduce you to another episode, Informed Interview, Talking with Toby. I have a special guest, Tom Duffy, today, who's joining us from a far remote land down the street. We couldn't make it work in person. Tom Duffy is founder and principal advisor of Jersey Shore Financial Advisors, LLC. Tom started the firm in 2007. I think I met you in 2006 as an alternative to the giant name brand advisory firms with the constant sales pressure telling me what I could or could not do for my clients. You can start us off with your tagline, because I'm sure people don't know what that is, so go ahead.
Sure. So my tagline, one of the promises I make to people is that, you know, I'm going to help protect your family's wealth from predators, creditors, and senators.
Somehow there's this stigma that you need to have a certain amount of money to be able to tap into a financial advisor. And not only that, a fee-only financial advisor. So can you just educate us on that?
Sure. So everybody should be entitled to financial planning. And believe it or not, there are financial planners out there that will work with folks that even if you're not wealthy, like many of us think, you must have a lot of money to get a financial advisor. It's almost like, you know, my dad used to like to say, oh, I got to get in shape before I go to the gym. Like, no, that's not the way it works, right? You go there to get in shape. You go to a financial planner to get yourself in financial shape. There are folks out there that operate on an hourly basis. They'll charge you for their time, and they'll deal with a certain issue or a couple of issues. Advisors, you have one end of the spectrum, you have folks that they sell stuff, right? So they're typically affiliated with an insurance company. So their method of compensation is they get paid when they sell an insurance policy or an annuity policy. They call themselves financial advisors. I don't know how much advising is going on. To me, that looks a lot like product sales. On the opposite end of the spectrum, you have folks that are fee-only financial planners. And I'm on that end of the spectrum. I get paid a fee to give you advice. And that's it. There's no product sales. I don't sell insurance. I recommend it all the time, but I don't sell insurance. I don't get compensated by insurance companies. I've even taken myself a little bit further out on the spectrum in that I'm a flat fee financial advisor. So my clients pay me a flat fee. It doesn't matter how much money somebody has. I charge them the flat fee. That's a little bit different to most fee-only advisors. They charge a percentage of assets they're managing. But there's got to be some fees and service charges and those things that are coming out, whether it's an insurance policy or an annuity policy or a managed account, but they've got to be compensated somehow, and they're entitled to that compensation. I don't want to say that they're not entitled to it, but I think, on the other hand, I think as a client, you're entitled to know where that money is coming from and how much that money is, so that you can determine whether or not there's a value there.
We run into situations now, and this is so new, but like any conference, I know you last year, it's AI. Just, you can't run away from it. It's everywhere, right? Okay. And people are using it more and more and more every day. Some people were scared of it. Now they are much more informed from the information that they are receiving. But as I always say, and this is current, garbage in, garbage out. So if you don't, you can prompt it to say whatever you want. And I'm just curious, do you know what to ask it? You know, maybe it'll make you a little bit further along, because my thought is like, we're using it as a tool, but it's still kind of out there, and it's, you know, you trust it. It's got some good information, but it's not the end all be all.
So artificial intelligence and asking questions and using some of the, you know, ChatGPT or Claude or whatever any of these tools are called, they're based on what they call a large language model. So basically that ChatGPT goes out and it looks at a giant library, and that's what it can pull from. Okay. And so think about that when we're asking questions of some kind of an AI tool. Where are they going for the information? If they're just going out to the whole internet, they're going to bring back the stuff that's on there the most, not the most correct, the stuff that's on there the most.
Another question primary audience that you serve? I know we have crossover for seniors, and I use that tongue in cheek because what's the definition of a senior now? And it's just hard for me to believe.
I'm the definition of a senior now. So,
well, we'll let everybody figure that out.
So the folks that I work with, and again, like you said, I agree, there's a lot of crossover. Folks that are right up against making a retirement decision. Maybe they have a Social Security claiming decision to make. They're within 5 years of making a decision, either before or after. I especially love working with widows and divorcees that, oftentimes the deceased or their former spouse handled all the money. Typically this happens. It's, the husband handled all the finances and now he can't do it anymore. And the wife is left with, oh my God, what did he do? I have no idea. He never shared this, or when he did, it was a terrible conversation.
Like, it seems like there's a barrier in the household, even though there isn't a wall, like you can easily navigate through the house, right? But so many times the line of communication stops, but you struck a key chord there. That is a huge, huge issue. And if you can get some learning happening while one of the spouses is still alive, that's helpful for the transition of when that spouse eventually dies and the other one, like you said, it goes, yeah, where is the so what account? And then, right, and then you get the family. So that's God's work right there.
It creates huge problems because all of a sudden, especially in the case where you have somebody's died.
You're the non-interested third party, and that's the buffer that you want. Like, he doesn't have any emotion. He's just looking at the numbers. You're going through your roller coaster ride of emotions, which is normal. So then just pass it off. So, and we were talking about planning. So this is something that we wanted to cover, the 4-letter bad word of IRMAA.
Sure.
IRMAA. Okay, 5. Two A's. Sure. Letters, 5 letters. So these Medicare beneficiaries get tripped up in this all the time. They plan for Medicare, the supplement, the drug plan, and then comes IRMAA, and they didn't realize that it could really increase their costs for Medicare. And not only that, but you never run away from it, right? Like you might be okay 1 year, but then you have a sale of something. And IRMAA is income-related monthly adjustment amount. Whenever you're dealing with the government, there's always gonna be an acronym, and they're always gonna be coming hat in hand, or maybe not, asking for money. So there are income limits in the area that we live. It's expensive to live here, so a lot of people blow through that. And there is an opportunity to appeal, and people just need to realize that they can appeal, so they don't have to go the entire year, pay that money, and then have them adjust it.
You can see there, if you're on an individual tax return, if you're a joint tax return, so the limit's $109,000. That's your standard base premium. But if you're a single filer and your tax is over $137,000, oh wow, now your Part B premium just went up to $405.80. I mean, that's
double. It doubled. From a cash flow perspective, whether you're retiring or not, there's a lot of marketers that want your money based upon emotion, because we are emotional creatures and we just jump and do things, and nobody's going to stop me. Tom, you're not going to tell me how to spend my money. Oh, no, you're not. But from a planning perspective, do you feel that it's effective for your clients that meet with you semi-annually to just go over, here's where we're at? You're almost like, and I said this, you're almost like a dietitian where you deliver the information that doesn't want to be heard at times, right?
Right. And then take from that what you want. So you're absolutely right. I'm never going to tell somebody how much they can spend. I've had people say, oh, you're going to put me on a budget. Me and budgets don't get along. Budget to me sounds like a diet. Right? Diet is a calorie restriction. Budget is the same thing. I just tell people, I say, look, I just want to know how much, I want to know where every $10 bill it goes. Now, it used to be where every $5 bill goes, but with inflation and tariffs, now it's every $10 bill, right? Where did that money go? Groceries, car insurance, fun, gifts, Christmas, all that stuff. I want to know where it goes. I don't really care where it goes, but I want you to know where it goes in case you notice, like, oh, wow, we do spend a lot of money in the liquor store. You might want to self-correct. Right. And that's on you. You don't have to. I don't care. But a lot of times, we just spend money. We don't realize how much we're actually spending. But if we know where your cash flow is going to be for the next 20 years or until you die, whichever comes first, we can make some assumptions as to what your cash flow is going to look like and what you have to do to preserve that cash flow, especially in the later years.
Do you have any advice for folks that are leaning into potentially using an advisor, using a financial advisor?
Sure. So there's a couple great sources for financial advisors besides myself. You can try NAPFA, NAPFA.org. They have a great Find an Advisor tool. The XY Planning Network also has a Find an Advisor tool. You can go in there, put your geographic location, put your zip code in there. And I urge folks, talk to at least 2, if not 3 advisors. Interview them, because this is a big decision as well, and it's an important decision. And if the first 3 don't work out, go talk to another 3 after that.
And I would just say in closing, first, Tom, Jersey Shore Financial Advisors, Tom Duffy, thank you for joining us.